All right, guys, I got some bad news. There are just some terrible stocks out there, and unfortunately, they are retail favorites to own. This is usually one of the most controversial videos that I do on this channel, so let's kind of discuss it all. And yes, we will absolutely talk about Tesla as well, because maybe it made the list, maybe it didn't make the list this time around, but we have to talk about it. So if you appreciate the honesty, at least consider liking the video for that, and let's jump into it. Now, to be upfront and to be very clear, we all make bad stock picks, guys. I have lots of bad stock picks. Warren Buffett, who's considered the greatest investor ever, has bad stock picks. Everybody has it who is an actual investor who has been investing for any length of time beyond, a month or two or whatever the case is. So this is not criticizing. This is not, trying to poke fun or anything else like that. It is simply giving you guys kind of what I see, why I think these stocks aren't necessarily the best stocks to own, and then kind of the thought process through it all. Bad picks happen to all of us. There's no judgment. There's no anything else like that. Just understand that we all do it. And this is kind of how we learn and get better, is through bad stock picks, of course, because when you make those mistakes, you're probably not going to make them again. I've been there, done that a million times, so there's no judgment here at all. All right, so stock number one is Legacy Auto. Any Legacy Auto, you take your pick. I just don't believe they're good stocks at all. They have been in trouble since the financial crisis, actually before the financial crisis, and things just have not gotten better for them over the decades. And now you add on the strike on top of that, and it's paralyzing to these companies in general. I don't see a path forward. I think that in some cases, the best path forward is for them actually to file bankruptcy, get rid of a lot of the bad debt, get rid of a lot of the albatrosses that hang over those companies, and then kind of being able to start fresh without all that other, baggage clinging and weighing the stock down, because in some cases, it doesn't matter what they do or how many vehicles they sell. It's never really going to drag them out of that pit. Almost all of them have lowered their guidance, and many of them have changed their profit outlook to basically taking them down. So there's just nothing really working in their favor. And oh yeah, talk about the strike and the fact that whatever those workers get in the end, it's coming straight off that bottom line that is already razor thin. So for me, at least, and especially coming into a high interest rate environment, which we're already in, and obviously a macro slowdown of some sort, none of these things line up for these stocks getting out of the doghouse. As a matter of fact, it looks like it's going to get even uglier for those stocks in the short term. So these are stocks I want absolutely nothing to do with. And kind of along those same lines, stock number two is solar companies. Now look, it's just kind of always been one of these things to where it doesn't make a lot of sense, and I'm talking about the US here, and the vast majority of the country to go solar given the high cost of solar and everything else. And in some cases, your HOA won't even let you go solar, even if you want to go solar. So that right there is kind of things working against them. But if these companies weren't printing money during a time when interest rates were near zero, and there was tons of government incentives, what's going to happen when those government incentives start to expire, or, another political party takes control and they're able to kind of change those incentives to something else or take them away altogether? What's going to happen to those companies when people are no longer able to finance those things out there at 0% or 1% or 3%, but now they're looking at 6%, 8%, 10% or more to finance those purchases? Heck, take a look at the past few earnings calls for Tesla. They're struggling with solar all the way around. So if Tesla, with all their engineers and all their cost-cutting measures and everything else, can't figure it out, for me, it definitely is not a good sign for solar overall. Now, long-term, they could very well be fine, but boy, we sure are coming into an environment where, for me personally, these are definitely a no-touch for me right now, in my opinion. So stock number three is Virgin Galactic, and that's right, guys. It made the list once again. It picked up a little bit of steam there. I was definitely getting a lot more comments about it over the past 2-3 weeks or so, and it's one I don't understand right now. If they figure out hypersonic speed transatlantic flights, definitely, I could definitely see a lot of profitability coming from those type flights, because I know a lot of business folks that have to make that trip. I guess what I'm trying to say is they would pay whatever the heck the ticket costs in order to take those sorts of flights. But space tourism, although I love it, I want to do it one day, there's just not a way for this to actually happen. And given the economy and given the environment that we're getting ready to come into, discretionary spending like a $200,000 or $100,000 trip to space is probably one that's not going to be happening too often for most folks. Even folks who can afford it during these sorts of times, they tend to kind of double down and invest more and kind of want a little bit of a more cushion, as opposed to during those boom times whenever you got extra money and you're just looking to kind of, take advantage and kind of splurge a little bit. For me, at some point in time, they're going to have to raise money again. There's just a lot of other question marks that are unknown in regards to this stock. And so it's a no-go for me at this stage. So stock number four is Lucid. And you guys know I've been off the Lucid train for a really, 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 really long time. I just felt like it got way too overhyped at the very, very beginning before they ever produced a vehicle. Which I was told I was crazy for thinking that, they were the next Tesla. They were going to beat Tesla. Some people thought that, all that sorts of stuff like that. Obviously, that proved to be completely inaccurate and what I thought was absolutely correct. but man, are they ever struggling to execute right now. And in the environment we're in, like we've been talking about here, it's kind of the theme of this video a little bit. How the heck are you going to sell high end cars? I mean, 150,000 or more for a lot of these vehicles. I agree, they look nice. They're really cool. I'm sure it does a lot of cool stuff. I've been to the store before. It's great. But man, I'm not dropping 150K on it at any point in time, regardless of whether I can afford it or not. And that consumer right there is having problems. But more importantly, they're having problems scaling in general. They're going to have to dilute shareholders again. It's probably coming again. I don't know how much more patient the Saudi backers are going to be. And if they pull that backing, Lucid is in a lot of trouble. Like it's bankrupt at that stage if the Saudis pull out and they don't continue to back this stock. So for me, I don't like that scenario. I don't like that dynamic at all in regards to companies that I'm involved with. And until they start proving something and proving that they can kind of get out of that, that production stage that Elon says is so hard to ramp and get themselves there, I really don't have any interest in owning the stock because it's really, really risky at this stage. Maybe they can turn it around once the economy turns around and they can kind of limp themselves along to get through this downturn time, but it's far from assured. So I'm basically going to stay away from the stock for now. On to the final stock before we talk about Tesla, and that stock is AMC. I'm sorry, you guys knew I was coming to this one at some point in time on this video. It continues to be something that I get comments about periodically in my other videos and such. And I'm sorry, I just don't see it. The ultimate squeeze is not going to happen. It's virtually impossible. The math is actually impossible in order to get there in terms of the amount of money needed in order that everybody would have to come up with in order to cover all these shorts and all this other craziness like that. There's just no reason to be invested in the stock beyond taking basically a gambling bet at that stage. That to me is really what the stock is intended for. If you're willing to do that, you want to play some gambling games. I'm sure at some point in time, somebody will send it up on a run and you can make some decent money there in terms of, same thing. You can make a lot of money in Vegas if you throw a bunch of money, on the roulette table or whatever as well. So I don't know. That to me kind of feels like what you're doing in regards to AMC. There's nothing fundamentally there. And I know some of you guys say, hey, every time you say that, Luke, the stock runs up afterwards. Well, I mean, look at the overall trend for the past, 6 months or so that this stock has been on this list. I don't think it's looking too pretty. So on to Tesla. That's right. Good old Tesla had their earnings call yesterday. And actually, I'm going to do a long form video on Sunday about this because there's way, way more to get into than just what we got to discuss right here today in regards to is the stock on this list or not in terms of worst stocks to own right now. It opens Tesla up to a lot of pain points that I haven't heard anybody talk about yet, but we'll talk about those specifically on Sunday. But shout out to my group members for going live with me last night. That was so much fun getting to kind of show you guys and kind of educate you guys on what a seasoned investor, 20+ year investor looks for on an earnings call, kind of separating out, hey, this is kind of what hedge funds think. This is kind of what institutional investors think. This right here is just basically hype for hype. Investors just kind of roll their eyes at this. They really get excited about this. There were some bullish points in there as well. Obviously, there are some other things that are not so bullish, actually bad in some cases. So it was really, really a lot of fun to kind of discuss those with you guys and kind of get deep and kind of separate that truth from the hype. So that way, whenever you click on a video and it says Tesla's going to 1,500 over the next quarter because of something that's a decade away, you kind of know not to fall for that and not really to count that into your calculation in regards to where Tesla's going in the short and the long term. So a ton of fun there. But I got to say, guys, despite this being a bad earnings call, it does not make my list of worst stocks to own right now. And let me tell you why. The reason's actually quite simple. It's because my thesis is not based on some crazy growth rate, some ridiculous spreadsheet that somebody put together, or some hype about something that may or may not actually produce a profit in the future, or something that's coming next year, but we've been saying that for the past 6 or 8 years or so. I don't make my projections on what I expect out of Tesla off of any of those sorts of things. It is based upon how Tesla executes to very conservative projections that I place out there. And I don't look out 10 years from now because nobody can project out 10 years. You can only project out, 2, 3 years. 5, you're really guessing at that stage. Anything beyond 5 is just a pure guess. 2 to 3 years is about the max. And so for me, nothing fundamentally changed with the stock to change my thesis in the stock. Basically, a lot of the things that a lot of other folks viewed as negative because it changes their thesis on the stock were never a part of my thesis to begin with. So for me, one bad quarter did not change the thesis for the stock in my opinion. But like I said, we'll get into more of that on Sunday. And if you want to watch the replay of that earnings call where we basically broke it down step by step, and you want to see my price target for Tesla, you want to see all my buy and sells on Tesla, you want to basically get my entire watch list complete with price targets, you want to take 5 courses for free. Well, this is 5 courses for free. You want to use our stock analyzer tool for free. You want to be a part of the best 6, 7, and 8 figure Discord out there. And you want to be able to slide in my DMs, jump on our live Q&As, Basically, talk to me anytime you want. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.